Hello and welcome to episode 2 of season 10 of the Dark Money Files, in which we shine a light into a murky world. I am Ray Blake, and with me is my co-host, friend and business partner Graham Barrow. Hello Graham.
Hello Ray.
And it's the second episode of our newly sponsored podcast.
It is, Ray, and it's a real comfort to know that this sponsorship has enabled us to continue with confidence what we started 4 years ago.
4 years. I agree. So, to all you fund managers out there,
and we know that lots of you listen to the podcast.
We do. Now, it can be really tricky trying to make sure that when you onboard new investors, you don't onboard the wrong ones.
Because that would not be a good thing, would it, Ray?
Well, no, it certainly wouldn't. But when each individual might have multiple records across multiple jurisdictions, fund managers open themselves up to potential fraud and reputational damage every time.
They do, but with Cure, K-U-R-E, the new product from Deeppool, global fund managers are enjoying a single always-on system that consolidates information into a single investor record and updates those records whenever and wherever they change.
Exactly. We suggest that you read up about it further at deep-pool.com.
We do. So, Ray, let's talk about money.
It's all we ever talk about, Graham.
Well, but yeah, it's true. But today, Ray, I'm talking about money in its purest form. I'm talking cash, folding, moolah, loot.
Yeah, no, I think we're there. We're going to talk about a recent Financial Conduct Authority press announcement, which, while it's centred on the UK Post Office, is still pretty applicable anywhere in the world that you use currency.
Which means pretty much everywhere in the world, surely.
Well, pretty much, although there are some economies which are moving strongly towards a cashless society, aren't there?
Well, there are. So, like Norway, where fewer than 5% of all transactions now involve physical cash, and 98% of the population own debit cards.
That seems a fairly random thing to know, Graham.
Yeah, I looked it up, right?
Right, okay. Well, the next thing is you'll be telling me which country uses the most cash.
Well, believe it or not, there is a published top 10 of countries that are still the most reliant on cash.
Of course there is. And which country came top?
Well, slightly surprisingly, Ray, it was Romania.
Okay. I find that quite hard to believe. Was this just out of the developed economies?
Well, sadly, the top 10 didn't provide that information, although there was others in the top 10 that definitely weren't developed economies. But it did assert that 42% of the Romanian population do not have bank accounts.
Wow.
And that 78% of all transactions in Romania are still in cash.
I'm going to say it again. Wow.
Well, yes. But there we are. What more can you say? Shall we return to our story? I guess we should start, for the benefit of our non-UK listeners, by explaining in a bit more detail the role of the Post Office. That's capital P, capital O.
Oh, yeah, we should, because it's very definitely not just about the post.
Well, no, it isn't. And you know, Ray, I think you are just the man for the job.
Well, thank you. I do know that the General Post Office, as it used to be called, dates back to 1660.
Really? But that was nearly 200 years, Ray, before the invention of the postage stamp.
Oh, you mean Sir Rowland Hill, wasn't it? 1840, I believe.
Penny back, you got it, yeah.
Yeah, but I think it's a common misconception that the post started with the pre-printed postage stamp. But this was simply a new way of marking an envelope that the cost of the post had been paid.
Okay, and before that?
Well, it was franked, as we'd say today, by which I mean the post was stamped with what we would now call a postmark or something similar.
I did not know that.
The entire history is very interesting. at least for certain values of interesting. One of the things we take for granted today is the uniform postal rate. You pay the same price wherever your post is going within the country, whereas initially the cost was based on the distance the item had to be carried, which I mean physically carried, along with the number of sheets that the letter contained.
Okay, so that would mean you were less inclined to write to people if they lived a long way away from you.
Which is odd, because they're likely to be the people you most want or need to write to, aren't they?
Well, yes. I mean, yes. I agree. Okay, any other notable landmarks you want to call out then?
Well, in 1969, Graham, it ceased to be called the GPO, the General Post Office, and became just the Post Office, which, apart from an ill-fated dalliance with the name Consignia a few years ago, it's still called.
Yes.
Back in 1969, when it was becoming the Post Office, the Post Office Savings Bank was hived off to form what's now called National Savings and Investments, or NS&I, but was variously during its time called things like the Department for National Savings.
Yeah. Yes, and if I go back to my days training financial advisors, was always one of those things that you had to take into account when advising on somebody's investment portfolio.
Quite
Fair
right.
enough. But it's odd, actually, you saying about the Post Office Savings Bank and various other things, because we're now going to talk about how the Post Office has at least partially morphed back into, you'd call it at least a quasi-bank.
Yeah, absolutely. It has its own financial services brand called Post Office Money, but it also provides banking services for most of the UK's banks.
Yes, including, has to be said, cash deposits and withdrawals.
Yeah, definitely. Particularly since lots of rural bank branches have closed down, safe in the knowledge that their customers could still access their services through the post office.
Yes.
Cash withdrawals can only be done through a debit card, and the majority of cash deposits need an accompanying debit card when you go to the post office, though.
You said the majority, so that means not all of cash deposits have to have a debit card in order to pay them in?
Yeah, no, some banks, including some of our biggest, allow deposits at the post office using just a deposit slip.
So that might indicate that third parties can pay cash into accounts that aren't theirs through the post office simply by knowing the correct account number and sort code.
Yeah, pretty much.
So what did the FCA have to say on the matter?
They were building on the work highlighted in the 2020 UK National Risk Assessment on money laundering and terrorist financing, which had identified an increased use of the post office by criminals as a way of depositing illicit cash into the banking system.
Okay, and I'm going to guess here, Ray. Presumably that was using the paying in slip process, which was one of the issues.
Well, it was the first issue they identified, Graham. They're not daft. They want to move towards card-based transactions every time to verify the legitimacy of the person paying in.
And even the most basic of bank accounts comes with a debit card these days, don't they, Ray?
Well, yeah, because they connect almost instantly to your bank and therefore your current balance. It's very difficult to overdraw an account with a debit card. It was much easier in the days of cheques when they took 3 working days to be cleared through your account.
Okay, but you said, quote, work towards card-based transactions rather than only accept card-based transactions.
Yeah, and I think that's an acceptance that there are still people on the margins of the economy who would be adversely affected by an immediate change, and any new policy has to balance the risks against any innocent collateral damage.
Yeah, and that's an issue we face every single day in our world, isn't it?
Yeah, it is.
Okay, so what was the next recommendation, Ray?
Oh, the ever-popular staff training, Graham.
Well, yes, but in a way that's really relevant, isn't it, for post office employees? Because unlike bank tellers who pretty much just do bank stuff, post office employees perform a wide variety of functions, not just banking. So they won't have the same understanding of money laundering typologies.
I suspect the post office will have a variety of recent relevant case studies to use for that training, though.
I suspect they will. I see next on the list was transaction monitoring.
And how many episodes have we recorded on the subject of transaction monitoring, Graham?
I'm just going to say a lot, right?
Yeah, quite a few, isn't it? It does come up every time one of these issues is publicised. And I guess it means one of two things.
Which are?
Well, one, it tends to be done very badly.
Okay, that's pretty straightforward. And the other?
That it's the wrong way to catch bad actors. So it will never be able to do what it's expected to.
Well, that one's a bit more controversial, if you don't mind me saying, Ray, and maybe worthy of a longer conversation another day. So what was the thrust of the FCA's comment this time around?
It was that banks ought to have transaction monitoring systems which allow them to identify suspicious activity within non-branch cash deposits and detect deviations between expected and actual activity.
Do you know, Ray, that reminds me of my days as a cricketer.
Does it really, Graham?
Well, yeah, it does. Bear with me.
Okay.
You see, there were certain captains that I played for, because I was never a captain, who would set a field to stop where he thought the runs were going to be scored.
Yeah.
But every time a batsman hit the ball through a gap, he would move a fielder there after the event.
In the process, opening another gap that the batsman could hit the ball through?
Well, that's exactly right, Ray. And because he didn't have unlimited fielders at his disposal, there were always going to be gaps.
And of course, banks don't have unlimited resources either in terms of people or money, and there's always a compromise to be made when it comes to monitoring.
Well, I think so, yes.
Yeah, so that really works as an analogy if you understand cricket.
Well, true, but I'm sure it translates equally well to other team sports. But anyway, I'm sure people will get my drift.
Yeah, I'm sure they will. Now, I see the next item mentioned is that banks should reduce cash deposit limits to below the existing £20,000.
Now, I'm going to be honest here, Ray, and say that comment raised my eyebrows somewhat. There are few businesses these days, surely, which would need to pay £20,000 or more over the counter of a post office in cash, wouldn't you say?
Well, yeah, I mean, I'd agree with that, I think. It does seem disproportionately large to me, especially as they go on to say you could have unlimited numbers of daily transactions. So 20 grand now, 20 grand later on today, 20 grand just before the place shuts.
So, I mean, effectively, you'd almost pay in unlimited amounts of cash at that rate, couldn't you?
Pretty much, yeah. The FCA is proposing a personal account limit of £1,000 in any 24-hour period, which is a really hefty reduction, but hard to argue against.
Oh, absolutely. And what about businesses then?
Well, they hedge their bets a bit by suggesting banks consider adopting a tailored approach based on expected customer activity.
Well, somehow I'm not all that surprised by that, and I don't think the banks will be particularly impressed, but I think actually it's also logically flawed.
How so?
Well, businesses are not the only entities with vastly differing requirements and turnovers. That applies to people too. But the expectation, I think, is that wealthy people will not need to pay huge amounts of cash over the counter at a post office because they've got other ways of doing it. I'm not convinced the same argument can't be applied to businesses as well.
Oh, you make a good case, Graham.
It happens occasionally.
Yeah. Well, yeah. But I think I can see a situation where it might not be so cut and dried. I mean, we've seen that there are pockets of different societies where people expect to be able to conduct their business in cash. So if you are in business servicing people in those pockets, you might take most of your revenue in cash. And if you run a successful business, that might be a lot of cash.
Well, yeah, I can see that, although I'm still not convinced you're going to then walk down to the post office. But yeah, I mean, you make a point. And it's not just an expectation that customers have that they'll be able to pay in cash. Doesn't legal tender give them the legally enforceable right to pay in cash?
Now, well, not quite, Graham.
Really? Oh, well, tell me more.
Well, strictly speaking, the principle of legal tender means that you can't usually refuse the cash as a form of satisfying a debt or meeting a financial obligation, but you don't have to accept it if there isn't debt or existing obligation in place.
So is that why a bus driver can require the exact change, or why a shop can refuse to take your £50 note?
Yeah, that's exactly right. You're offering to enter into a contract at the point of purchase, which the other party, the bus company or the shop, is free to decline.
Well, now I seem to recall from my days as a shopkeeper a long time ago that the shop, in putting a price on its goods on the shelf, is not making an offer. They are providing what's known as, quotes, an invitation to treat, unquote, meaning that you as the purchaser make the offer at the cash till, which can be accepted or not as the vendor sees fit.
Quite right, Graham. You remember your contract law very well.
Well, Ray, I certainly remember the case of the Pharmaceutical Society of Great Britain versus Boots Cash Chemists, brackets, Southern Limited of 1953. It's the one that's in all the textbooks.
Well, it certainly is. So, going back to the FCA's proposals, I see the next item on the list was SARS, Suspicious Activity Reports, a perennial favourite, of course. The FCA want banks to file them more quickly, as it deemed some internal service level agreements too high.
Well, fancy that.
Oh, yeah. And finally, the FCA would like banks to make greater use of intelligence sharing to identify specific post offices where large amounts of cash are being laundered.
And not just with other banks, but with other firms, I see, and law enforcement and any other body that might help.
You know, reading through all these requirements, it's reasonable to say that they're not unique to cash placement, actually, are they?
No, they're not. But of course, the single biggest difference here is the near impossibility of following cash deposits back further than the point of paying in. And that is less true for other placement activities.
That's true, which makes both the identification and control of these payments all the more important.
Yes, although it is also important to point out that the FCA include data on the report which suggests that 6% of the UK population still uses cash for all of their purchases. And even more interestingly, that figure rises to 9% in relation to vulnerable people, so that be elderly, people with specific difficulties, with mental health issues, etc. etc.
And therefore, financial institutions need to balance their controls between actively identifying potential criminal funds and putting barriers to access in the way of people who need these specific services.
Yeah, and that's absolutely right, Ray, which makes me think we should do a podcast soon about the way that we measure risk. The differences, for example, between volumes and values when it comes to anti-financial crime controls, and how we should deal with the twin issues, one of my favourite subjects at the moment, of noise and bias in risk management.
Ooh, that sounds like an episode made for us.
It does indeed. Is there anything else we can add to this story, though, Ray?
Yes, there is. At the same time as the FCA announcement was made, Rachel Walcott from Reuters published an article explaining how the FCA statement related back to the fine they levied against Santander at the end of 2022.
A topic we covered at the time.
Yeah, but Rachel goes on to reveal that the client referred to in the final notice as Witness A was a firm called Beltcastle, which was authorised by the FCA and which put over £1.3 billion through the post office in cash.
Blimey. Even by our standards, that's quite a lot.
Oh, even today, that's considered, an appreciable sum of money.
Well, yes.
And it didn't help that, allegedly, the firm had links to the Colombian drugs cartels.
Oops.
Yeah. I mean, expect to read more about that in due course, but I think that's about as far as we can take things for the moment.
Well, I think you're right. But we do now have a good idea for what's coming next, don't we?
Well, a couple of ideas in there, aren't there? I am very much looking forward to it.